if I look in the traditional macro area, most of them aren't really talking about crypto. A lot of them are kind of doing the thing where like, oh, it's dead, right? Kind of like how 2018, 2019, it just kind of not on their radar anymore. It's dead. Uh, same, including Bitcoin for that matter. Basically, they're just like, yep, the whole space bubble, it's gone. They view it kind of like ARC style stocks, basically unprofitable growth stocks. Um, Obviously, when I look at Bitcoin spaces or when I look at crypto spaces, which are increasingly kind of two separate spaces with some degree of overlap, um, basically the Bitcoin people are generally in pretty good spirits. I mean, I was at Pacific Bitcoin, for example, while FTX was happening. And so the Bitcoin price was nuking, the whole industry was nuking, and people were like celebrating and laughing about it. Obviously there's a lot of development happening in the space. People often talk about lack of Bitcoin development, but of course that's mostly base layer focus. There's actually quite a bit of ecosystem development, basically making Bitcoin easier, more accessible, faster, more expressive, things like that on various parts of the ecosystem. As for crypto, I mean, this week was big. I mean, the past couple weeks, there have been a number of people warning about increasing levels of banking system cutting off various crypto entities. And then we've kind of seen the hammer come down on custodial crypto staking from the SEC. Basically, kind of looking at that as like an investment contract that is subject to regulations. I think this has been rather telegraphed since the FTX debacle. That really kind of lit a fire under regulators, gave them a lot more, kind of just, coverage to go after certain things. We've also seen a shift in the head of the Commodities Futures Trading Commission. He used to kind of talk about Ethereum being a commodity like Bitcoin. He walked those back in November, those statements back, and kind of would say, okay, Bitcoin's a commodity. We'll see about everything else. We'll leave that to the SEC. So I do think we're kind of seeing a shift away from some of these kind of centralized custodians. And I think it's going to disperse globally. I think some of it's going to be muted for a while because it affects how much big capital can go into it. And so I think it's a troubled area, but I think there's going to be future bubbles, future growth cycles in this whole space again.
Yeah, absolutely.
If you look at how Bitcoin works in terms of transaction numbers, in terms of transactions, it can do somewhere around 10 million a month. And you can also batch those payments, so you can get tens of millions a month, kind of at most on the base layer, and that's in a world of 8 billion people, right? And that's a world where not that many people currently do on-chain transactions of any sort. The overall Bitcoin and crypto market combined is still somewhat niche when you're talking about global markets. Especially at scale when you're talking about not operating in custodial environments. So, you say how many people are in crypto, quote unquote. It's like, well, are you in crypto if you're just trading on Binance? Maybe not really. It's like how many people are actually using on-chain stuff, whether it's Bitcoin, whether it's other blockchains, and the answer is not that many. And so if someone is bullish around the future of this adoption and this technology, if they think 10, 20 years from now, there will be a lot more than 10 million people that want to use Bitcoin per month, on like one transaction per month, then you're going to get significant fee pressure. We've already seen, I mean, just in recent weeks, this whole like ordinals thing, people got enthused about putting pictures on it. That's kind of filling up block space to some degree, and that works as long as fees are super low. But basically right now there's just not 10 million people that are willing to pay fees to do an on-chain Bitcoin transaction. But I think in 10 years, 15 years, especially when you have almost no new Bitcoin being created, what I will expect to be significantly more demand for Bitcoin, I think there's a lot more overall fee pressure going to happen. Now, if that doesn't happen, that's an adoption problem, right? That just shows that for some reason the technology was not interesting enough to people. It didn't solve enough problems, basically, that they, their demand for money was either met elsewhere, or they're just not really interested in kind of having different monies, and maybe they're still monetizing other things. Maybe they're not interested in censorship resistant payments, whatever the case may be. If adoption doesn't take off, then yes, you could in a number of decades get kind of a fee problem, but that wouldn't really be my base case.
Most of our listeners are pretty crypto native and we don't talk much macro, so I thought it'd be great by just kind of getting your kind of forecast over the next 6 to 12 months, what you're seeing, what you're paying attention to get us up to speed on that front?
Yeah, I think the long short of it is that, obviously there was massive fiscal stimulus in 2020, 2021, huge burst of broad money around the world with a lag that started to translate into higher prices on aggregate because there was not a uptick in production of goods and services, but there was an uptick in purchasing power of basically at least currency units. And so you had a lot of people going out and buying things and not necessarily a lot available. When you add things like war, geopolitical risks, rising tensions between China and the United States, basically some of this globalization, maybe not going away, but just kind of, not growing the way it was, maybe even pulling back to a certain degree, there's generally more inflationary pressures. And so 2022 was a year of central banks trying to fight back, trying to rein in credit creation, trying to get the air out of excess asset prices, basically increasing the cost of capital so that most valuations compress. A lot of malinvestment gets kind of pushed out of the system. And right now we're kind of at an inflection point here in 2023 because fiscal policy is still very accommodative. There's still very large deficits kind of flowing into the economy, but central banks are still being kind of aggressive. And I think, one of the risks of a policy mistake is that normally higher interest rates are a way to reduce money creation from bank lending, right? So when we think of the 1970s inflation, that was because there was a demographics boom and banks were lending. They were creating more and more fractional reserve money. And so tighter monetary conditions were a way to try to rein that in. Whereas when, for example, we look back at the 1940s inflation, fewer people are familiar with that time frame. You had inflation that was just as high as the 70s, but that was not due to bank lending. That was due to fiscal spending, obviously on the war. But then that war spending would go back into the economy, and so you had a big increase in the amount of money in the system, and you got much higher overall inflation, even though banks weren't lending. And basically, we have kind of a 1940 style inflation so far this decade, but central banks are kind of treating it as though it's like a 1970s inflation. And I think this is bound to cause problems in the years ahead. I think if I were to say it overall, I think right now we're in a disinflationary period within what is at risk of being a longer term inflationary decade on average. I think we could get more waves of inflation before this decade is done.